the Mega Backdoor Roth. You can get $70K into your Roth 401k every year. If you're 50 and older, the amount is even higher. You need a 401k to execute the Mega Backdoor Roth strategy. Specifically, if your employer or your solo 401k offers you the option to contribute to the after-tax 401k, then you can execute this strategy. Let me explain. There are three different types of 401k contribution options: pre-tax, Roth, and after-tax. After-tax is a confusing name since a Roth is also an after-tax contribution. However, the Roth and the after-tax account are different. If you are talking to an HR person at your work, decent chance they do not understand the difference between a Roth and an after-tax contribution. With most brokerages, you can log in and see the various accounts that you have the option to contribute to. If you see the option to contribute to these three different accounts, you can do the Mega Backdoor Roth. You may need to directly contact the brokerage that custodies your 401k to figure out if you have this option. So, the Mega Backdoor Roth makes a lot of sense if you have cash that you want to invest in the stock market and you already have maxed out the employee contribution limit of $23,500, $30,000 if you're over 50 years old. Picture this. You have maxed out the employee contribution of $23,500 and have received an employer match of $5,500 for a total of $29,000. You still have $41,000 left to reach the IRS maximum contribution limit of $70,000. The way you can contribute the additional $41,000 is by doing the Mega Backdoor Roth. Your other option for investing in the stock market is by investing your cash via a taxable brokerage account, but you will have to pay tax on the gains. I like tax-free gains when I have the option. The only reason I can think of where it would make sense to invest via taxable brokerage account when you have access to the Mega Backdoor Roth is if you're planning to use most of these funds in your late 40s to early 50s. The reason why is that you have to wait until 59 and a half to access the funds in your Roth. Step one for the Mega Backdoor Roth strategy is making a contribution from your paycheck to your after-tax 401k. You do this by logging into your brokerage account and electing to contribute a dollar amount or a percentage of your paycheck. Once the funds are in your after-tax 401k, you must convert them to your Roth 401k. This conversion process takes place in one of three ways. One, you have to call the broker and ask for every conversion. Two, you have to send the broker paperwork after every 2 weeks requesting the conversion. Both of these options are a little bit tedious and annoying, but tax-free growth makes it worth it. If you don't convert the funds to Roth, you will have to pay tax on the earnings in the after-tax 401k account. Now, hopefully your brokerage offers the third option, which is the best: automatic conversions. Whatever method is required for your brokerage, you have to stay on top of it and make sure the funds are converted to Roth. Bonus tip: if you're all in on the idea of a self-directed Roth, then that is an extra point in favor of this strategy. A self-directed Roth allows you to invest in a variety of alternative assets, such as crypto, real estate, startups. A Mega Backdoor Roth is the way to superfund your Roth account. You typically can't self-direct your employer's 401k plan, but once you leave your current employer, you'll be able to roll this Roth 401k to a solo 401k or Roth IRA where you have many more investment options. So you might as well fatten up the Roth balance with the Mega Backdoor Roth.
Hey, my name is Arash. I help people create plans to pay less in taxes. Did you know if you like, subscribe, and comment on my videos, you will automatically save 10% in taxes? Okay, that's actually not true. Also, I need to let you know that none of this video should be taken as tax advice. However, I would love to give you individualized tax advice. All you have to do is schedule a consultation on my website, link below.